Welcome to today's market report.
Global stock markets fell on Monday, pulled lower by technology shares in Europe and on Wall Street, as U.S. Treasury yields jumped ahead of inflation data that could prompt the Federal Reserve to tighten policy enough to slow a rebounding economy. The euro rose against the dollar to snap a 7-day losing streak as the single currency rallied after French leader Emmanuel Macron beat far-right challenger Marine Le Pen in France's first round of presidential voting on Sunday. The dollar held just below almost two-year highs against a basket of currencies and strengthened against the Japanese yen, up 0.88%, and versus commodity currencies, the Canadian and Australian New Zealand dollars. Weaker than expected February UK GDP growth figures did not have a lasting impact on GBP USD, which continues to trade sideways in the 130.30 area, with the pair finding support in the form of last week's sub-130 lows. Last week's lows marked the first time that cable had traded sub-130 since November 2020. The cable's resilience at the start of the week is somewhat surprising, given the drop seen in global equities as a result of geopolitical China lockdown worries. Normally, a drop in other risk assets weighs on sterling pound. GBP/USD is likely finding support from a jump in domestic UK yields, which are tracking their continental counterparts higher, narrowing the US-UK rate differential. Subdued trading conditions may also have something to do with the caution ahead of an upcoming barrage of UK and US risk events. Demand for safety pushed dollar-Swiss franc lower to the 0.93 region and gold higher as the bright metal trades around $1,950 a troy ounce. Soaring US government bond yield helped dollar-yen to reach a fresh multi-year high of 125.76. Bitcoin fell 5.66% to $39,748.60. China's inflation figures surprised on the high side on Monday, although they were still relatively modest at 1.5% year-on-year in March.
This is today's market news. Thanks for listening. We'll see you next time.